Amazon just posted Q1 results. Revenue from online stores was roughly flat at 51 billion. Physical stores increased 7% to 4.9 billion. Third-party services increased 18% to 30 billion. Subscription revenue increased 15% to 9.7 billion. Advertising increased 21% to 9.5 billion. AWS increased 16% to 21 billion, and other bets increased 55% to 1 billion. But despite this growth, the stock has fallen roughly 4%, and there's an obvious reason why. Although AWS is showing year-on-year growth, this was the first time that revenue has dropped against the previous quarter, and AWS operating margin has now fallen from 31% in 2022 to 26%, resulting in a quarterly decline in operating income as well. This is causing investors some concern. AWS is seen as the jewel in Amazon's crown, so a slowdown causes a lot of damage to the Amazon bull case. Looking at the bigger picture, the company is now valued at over $1 trillion. Trailing 12-month revenue sits at 525 billion, net income at 4.2 billion, and adjusted ebitda is 57 billion. So the stock is valued at roughly 2 times revenue, 249 times earnings, or 18 times ebitda. Combine the slowdown in AWS and this negative free cash flow, and investors are becoming worried about the stock's valuation. However, Amazon remains a unique company, and management's ability to keep reinvesting profits for growth continues to impress. After all, this remains a difficult economic environment to operate in. Meta grew revenues only 3% this quarter, and Alphabet grew less than that. AWS advertising and third-party services continue to look like great businesses, and AWS will get a tailwind from the explosion in artificial intelligence. As Andy Jassy said on the conference call, few folks appreciate how much new cloud business will happen over the next several years from the pending deluge of machine learning that's coming. And I think the explosion of AI startups and AI apps bears this out. So let's assume AWS can keep growing at a rate of 15% per annum for the next 10 years with 30% EBITDA margins. That would produce 89 billion of ebitda on its own in 10 years' time. Apply a 25 times multiple and you get a valuation of 2.2 trillion for AWS, which works out to an investment return of 7.6% per year. But again, that's AWS just on its own. It doesn't include any of Amazon's other powerful businesses. And looked at historically, Amazon stock does look reasonably cheap. EV to ebitda is about the same as it was in 2008. And price to sales is roughly the same as it was in 2016. Both times proved to be good buying opportunities. For all of these reasons, I continue to give Amazon a bullish rating, and I do own shares in the stock, but these are my personal opinions, not financial advice. For more detailed investing ideas, make sure to visit our website overlookedalpha.com.